Jonathan, why are we having a positive reversal today?
I don't know if we would call it a reversal just yet. Yes, we are seeing a stabilization from the sell-off that we've seen over the last 6 or 7 trading sessions. It's good to see a bounce, but we don't know if it's real until we see consecutive days of this. I think what we're seeing right now is just somewhat of a cool-down period from the selling that we've seen. Continued rhetoric back and forth, talking about U.S.-China relations and what's going to happen there. I think now we've all calmed down a little bit and come to the realization that we're not really going to get any progress in this or any clarity in this until the G20 summit. We've got at least another month, 6 weeks ahead of us before we get to that date.
Perhaps that will give some clarity. Would you consider the selling action we've had corrective?
I don't know if it's really corrective. I think it's more of we've been expecting information, we've been expecting data. The goal line we thought was presented closer to us, but now that can's been pushed down the road, I just think that people have been taking some serious risk off the table just for the time being. Overall, I mean, you take a look at our markets right now, right? So we're in the middle of May. Markets are up 12% on the year, right? So if you and I had a conversation on December 31st and said, sign right here, you sign on the dotted line, we'll be up 12% mid-May, you'd say, done. I'll do that immediately. So keep things in perspective a little bit, right? We're up about 17%, 5% pullback right now. Still rather positive for the year if you had to close the books.
12% is better than no percent.
Exactly.
You've mentioned that you would welcome a correction. Why is that?
So markets can't just move in one direction, right? They can't go straight up. They can't go straight down. So backing that to the up 17% in 5 months, that's great for your portfolio. It's great, signal that our economy is doing well and that the investor sentiment is there. But trees don't always grow straight all the way to the sky. At some point, they have to, pull back a little bit. It makes our markets quite healthy, right? So we're going to see a pullback here. Investors who thought that they missed the boat in March and April are going to say there are some prices now that are down off 3%, 5%, 8%. I feel a little bit more comfortable putting that money back into this market at this point. So it gives investors opportunities to get in and out of our markets.
Thanks for clarifying that. Also, the Russell is in or around a correction since its August highs. Why are small caps feeling the brunt of this?
I think that they've been pulled in with all the other corrective measures that we've seen in our market so far, right? When you see the market swing the way that we have, overall sentiment kind of groups itself together and it travels in packs. So we're seeing all sorts of stocks from different sectors, from different indices pulled into this selling pressure that we've seen.
And you're very close to the Russell. You think that it gauges a nice read of the overall stock market, right?
I do. I think, it gives us a pretty healthy view of what's going on in our market, what's going on in our economy. You can't just look at the Dow. I know from a, media point of view, people like to say the Dow was up or the Dow was down, but really looking at the S&P 500 and the Russell are clearly different indicators and clearer indicators of our market and our economy.
Thank you, Jonathan, so much. Besides the G20, anything else you're looking forward to?
Maybe stop raining here in New York. I'll be looking forward to that. This month is somewhat interesting, right? We do have a holiday that's coming up towards the end of the month, but we do have a larger, expiration that comes, the MSCI at the end of the month here, which always gives portfolios an opportunity to really move in and out of chunky stocks. IPO calendar continues to be pretty robust. We hope to see, a few more names come down to the NYSE. Maybe not this month, but next month. And I think overall, just continuing looking at our economic calendar will help hopefully buoy our markets during this troubling time.